All right, we are live with Dylan Kelly over at Utah Community Credit Union. Dylan, how you doing, man?
Great, great. Thanks for having me on.
Oh, I'm excited to talk to you today. You and I have worked together for quite some time, and we recently connected over kind of a funny situation that happened at your office. And we started talking about, I think we first started talking about like rural development and some of those things, some of the challenges that you see in that arena. But it evolved into talking about first-time home buyers, and it sounds like you see a lot of first-time home buyers coming your direction. Is that right?
Yeah, absolutely. The area that I'm in is a really popular first-time home buyer community, especially for single-family homes that are detached, not necessarily condos and townhomes. We do have those out here, but I do get a lot of first-time home buyers. And the range, the price range out here is something that a lot of those families can afford.
Yeah, yeah. And first-time home buyers are tricky. You know, it's kind of funny. I laugh because I look back at when I was buying my first home, and my poor loan officer, being the type of person I am, I peppered them with a bunch of questions, not really quite understanding everything that was happening. And I think a lot of first-time home buyers have just general misperceptions of what the home buying process is going to look like. And so that's why I wanted to ask you, really my first question is, you know, what are those misperceptions? What are people coming in and having a conversation with you about where you're having to maybe redirect or change their perception on the home buying process?
A lot of first-time home buyers that I get, they feel like, okay, I'm an adult now. I need to rent for a few years. Then I need to buy a house. They don't realize that right out of the gate, you know, while they're in school, whatever, they can buy a house. There are ways that we can do it, and you don't need to have this big 20%, 15% down payment. We have options too, where we can get in, 100% financing. This again, like we were talking about with the USDA or rural housing loans. Um, that's a big, they don't realize that there are options out there available to them without kind of following that standard. Oh, I'm going to graduate from college, then I'm going to rent for a few years, then I can buy my first house. No, we can get you into a house right away.
Yeah, that's one thing that I find interesting. I don't know if you ever get onto Reddit, but I've been following all these social platforms on personal finance and credit because there's just so much information out there. And a lot of people have gone back to this concept where it's like you have to have 20% down. That's the best way to buy a house. You know, you want to make sure that your credit score is a 740. And yes, all of those things make sense to really optimize the home buying process. But if you're, if you're in college or right out of college, you're looking at starting a family and you want to buy a house, a lot of people don't even start or explore those options just because they hear the advice that you gotta put $20,000 down on your house or $30,000 down on your house. But when you're making 15 bucks an hour, down the road, that's terrifying, right? That's scary. So, you nailed it on the head. I think a lot of people just don't know what their options are. And being in the location that you're in, you probably see a lot of young people who just got married or just recently married. And maybe they're looking to buy a house. I got married a year ago. It's terrifying, the concept of bringing two worlds together and finances and everything else. What advice do you have, maybe not so much on the relationship side, but maybe on the mortgage side for people who have recently been married and are looking to buy a home?
One of the things I tend to run into a lot, especially with newlywed couples, is they want to feel like their first home is their dream home. They love new construction. They love this idea of a 3-bedroom, 2-car garage home. Your first home is not going to always be your dream home. It may be a 1 or 2-bedroom condo or townhome. But if you get into something like that and know that it's not your dream home, but it's something that's helping you start the process, you're going to build equity. This is going to be your home. You're going to own it. Down the road, you can look at buying your dream home, but you need to keep your expectations realistic. You cannot, not everybody first home is a $500,000 home on, a couple of acres. You got to start somewhere, and it may need a little TLC to get into it, But those are the kinds of things that, ultimately you build memories from. It's a great place to start a family. That's the first thing well, that seems to be a common thing that I run into with a lot of newlywed couples. Another one is pay your bills. I get a lot of folks that just decide they don't like their cell phone company and they just quit paying them, or they've signed up with internet, and even though you've not borrowed money, it's not a credit line, these guys will still file a collection against you. It could be a $17 unpaid cell phone bill, but that can hurt you so much. I mean, you don't understand how much that could affect your ability to purchase what programs you have available to you. So just make sure and pay your bills, even if they're little ones.
It's so funny how simple that can be, right?
Yeah.
Like just pay your bills and try not to let it go to collections. And for a lot of people, it's kind of, I'm not going to judge because I see this every day, but when people are getting married and they're bringing, they're opening joint checking accounts, they're doing this and they're doing this, I find that oftentimes they're not very transparent about money. I mean, do you ever see that when they come in and they want to buy a home, and then the wife looks at the husband and goes, "Wait, what's your credit score? I didn't know about this." Do you ever see that?
Yeah, sometimes it's a wake-up call for the applicants as they are sitting there and I didn't know you had this card or that card. Or there'll be, sometimes positive points. Wow, I didn't know your credit was that good. I had no idea. Then the other party feels like they need to kind of step it up. So yeah, definitely, it does help. Fortunately, my situations, I've not, nobody stomped out of the room yet, but there have been a couple surprises that have come up.
That's awesome. I will probably say that was one of the hardest things from a dating standpoint, being in the industry that I'm in. I'm sure I was just, being that I'm kind of a credit nerd, that probably wasn't very pleasant, 3 or 4 dates in saying, "Hey, by the way, tell me a little bit more about your credit history. Are you above par here? Because I got a reputation to upkeep." But no, that's one thing that we oftentimes, we don't see it up front, but we deal with it on the back end. We deal with the spouse trying to take control for another spouse that's, trying to deal with a situation they didn't know about. So maybe, I would say, to add on to your point, pay your bills, have realistic expectations, and be transparent about your credit. I think that's maybe one more thing that we could add on to that piece of advice for newlyweds looking to buy a house, because we see it a lot where somebody feels like they have to then take control of it and try to fix something that ultimately isn't theirs. And one thing that I love about working with you and working with your company is, there does seem to be this level of compassion and kind of this realistic perspective on, hey, we want to make sure that this is the right thing for you. You guys aren't pushing people into loans. You're not pushing people into trying to buy a house if it's not the right thing for them. And I wanted to maybe touch on that for first-time home buyers. What do you look for that are like maybe red flags that, consumers should really tackle before they start the home buying process? Are there things that you look at and go, you know what, maybe that's something you need to go figure out or tackle before you actually try to jump into the home buying process?
Well, like I mentioned, if we do come across something like a collection account, and it could be just something small, an unpaid medical bill. Like I said, they canceled their cell phone company contract. They owed one more payment. They just decided not to make it. Even though it's a small amount, that's going to really affect their ability to qualify. Sure, we can get them into a loan, but if we could increase their ability to qualify, better their credit score in a couple of months, all of a sudden their rate goes from 5.25 down to in the fours. We'd much rather get somebody in with a low interest rate, a payment that is more manageable for them. We don't want people to jump into a house and be house poor. We try to keep their monthly payment comparable to what they were paying in rent if it wasn't living with family or something like that. Keeping their debt to income ratios. You can go high, you can go up to 55% with some programs. We like to keep everybody at 45% or lower on their debt to income ratios. Maybe if there's a couple of things we need to clean up, unpaid bills. If they've got a small credit card, maybe if we pay that off, things like that. We may work with them a little bit to get them into the best program possible. If they desperately want to get into this house, if they found something that they really like, they're afraid they're going to lose it, we'll help them get it. We can work with them down the road, maybe get a lower payment once they've taken care of some things. Maybe even after they have a little equity in the house, they can take care of some other expenses.
Yeah. Yeah, I like the way that you guys go about it, because it's tough. You get a lot of people who, they get anxious, they get emotional, they want to buy the house. It's the house that they're going to live in for the rest of their life, even though statistically they're going to stay in it for 6 years. But for a lot of people, they get very aggressive. They want that house, and sometimes it can be hard to say, is this the best thing for you? And one thing that I oftentimes see is that younger consumers are the ones that probably need to hear that the most in some situations. And one thing that we oftentimes see that I find interesting is there are people who will come to us who are looking to credit qualify. They're trying to get ready to buy their first home, and they have really, this misunderstanding of how important credit is as well. In fact, I just went and bought a new computer 2 nights ago. I've been using the same computer since 2013, which, not a lot of people can say that. And it's been beaten up. I've had it crushed on flights and all types of stuff, and it's just totally beaten up. So I've been so excited to go buy this new computer. And I walk in, the guy asks me what I do, young guy, and I tell him, and he says, "Oh man, I ruined my credit when I was 18. This kid couldn't be older than 21. He says, "I ruined my credit when I was 18. There's no way. I'm just waiting it out. I'm just waiting it out." And it's just like, oh, that's going to be a long and painful road if you don't be proactive about it. And a lot of people just kind of have this misunderstanding of credit that, one day everything will be gone, and then maybe I'll buy a house. Do you see that much with people coming in, or they just don't get really the importance of credit?
Yeah, exactly. If they've got a great job, they're making a decent living. They may not have other debt, but there's kind of 3 main things that we look at: your debt to income, your loan to value, how much you're going to be putting down on the house, and then your credit score. And that's a huge determining factor on your ability to qualify. What programs do you have access to? How underwriting is going to review your file? What type of homeowners insurance you're going to be able to get? What type of private mortgage insurance you're going to be getting? There's so many areas that credit, that one or 2 numbers, depending on what type of credit inquiry you're getting with your loan, it makes such a big difference. And yeah, it's like I get a lot of people that are similar, where they had old things. They just think, well, they have quit sending me letters. It's done. It's gone away. They don't realize it's still on their credit report. It's still following them around as a delinquent item or a judgment or whatever it might be, and it is affecting their score.
Yeah, that's probably one of my favorite things, is when you see people who say, "Oh, I'm just going to wait it out." I don't get letters or phone calls anymore, so I'm good. Let's pull credit. I'm ready to go. And it's like, oh, cross your fingers, right? Like, let's see what happens. Rolling the dice. But Dylan, I got to tell you, just from a professional standpoint, from a customer perspective, really the focusing on the customer experience, making them really just feel like $1,000,000. You and your company and your team do such a fantastic job. And every single one of these videos, I gotta highlight why our referral partners are so amazing. And Dylan, you fit into that category of really going the extra mile to make sure that people who should be able to qualify for a home loan get a fair shot at least getting to a point where they can credit qualify. And you do it better than most. And so I can't thank you enough for being an amazing referral partner and such an awesome just mortgage professional, really advocating for consumers in general. So I appreciate you being on this video with me. Before we sign off, is there anything that you wanted to say or close with?
No, I appreciate the time that you've given me, and I just want to say, to you guys, thank you for helping a few of my clients. When we explain to them the benefit of just increasing their score by a few points, they see the value. If they wait a couple of months, all of a sudden they can afford 100,000 more on their property, or their rate is going to be that much lower. The interest savings, yeah, there may be a little bit of sending some letters and taking care of some items, a little bit of upfront cost, but the long-term savings is so beneficial. So when I have an opportunity to explain that to somebody, and then the help that you're able to provide them, it's great. It's so wonderful. So we really enjoy working with you guys as well.
Well, Dylan, thank you so much, man. I'm going to put this video out there. Obviously, Dylan's contact information will be in there. If you are looking to purchase a home, especially if you just got married and you don't know what your spouse's credit score is, go talk to Dylan, because he's going to gently just kind of make sure that process goes well. Because if you come see me, oh, you're in trouble. If you get married, you don't know what your spouse's credit score is. Oh, that's bad news. So go talk to Dylan. But Dylan, thank you so much. If you're watching this, thank you so much for watching this and being a part of our community. And I'm sure, Dylan, I'll talk to you soon.
Okay, thank you very much.
Thanks, man.
Take care.